Invisible yet powerful, services trade is quietly shaping the backbone of global economic growth. As a key platform promoting the sector, the 12th China International Fair for Trade in Services opens on Wednesday in Beijing. Now, since the first edition in 2012, the fair has grown into a global stage for showcasing new trends and technologies in the services sector. It now stands as a microcosm of China's push for openness and high-quality growth, and a window into how China's trade in services is gaining momentum. What can we expect during this year's fair? What does this focus on the services sector reveal about the direction of China's economy, and what impact may this have on China and its global trading partners? Welcome to a special edition of The Point with me, Liu Xin, coming to you from Beijing. I'm pleased to be joined from Berlin, Germany by Andreas Hube, Managing Director of the German Federal Association for Economic Development, Foreign Trade, and co-founder of China Bridge, a non-partisan dialogue platform. From Rome, Italy by Ivan Cardillo, chairman of the Italy-China Business Development Forum, a strategic bilateral cooperation platform. From Los Angeles by William Lee, chief economist and executive director at the Milken Institute, an American think tank. And last but not least, from Beijing by Zhou Mi, deputy director at the Institute of American and Oceania Study of the Chinese Academy of International Trade and Economic Cooperation. Gentlemen, the warmest welcome to all of you. Let me go to Mr. Zhou first. Here first, of course, some numbers to give people the big picture of China's total size in terms of services trade. Now, last year, China's total trade in services reached $1 trillion for the first time. That's up by 14% year on year. And also in the first half of this year, 2025, actual foreign investment in services was almost 3 times that which went into manufacturing. But first of all, help us understand in layman's term, what does services trade mean exactly? Why the big focus?
Well, we know that trading services is kind of businesses that's happening between the different stakeholders in different countries. Like the trading goods, they are transacting about the goods, but then trading services, they are transacting the services. So as we know that services is a kind of a very important trend, we are now seeing that many of the services sectors in China and other countries are growing very fast. Well, on the other hand, I think the Chinese government is really helpful for strengthening the abilities and trying to facilitate the trading services. If you are looking at the trade agreements, we have signed many free trade agreements, including many chapters to do with the services trade. Well, from another side, I would say that technology is also improving the abilities for the people in different countries to do businesses. That is the trading services. That's very important for us to deal with education, construction, logistics, and also finance, a lot of different areas that you can find from the CIFTIS this year.
Yeah. The 12th China International Fair for Trade in Services runs from September the 10th, as I said, till the 14th in Beijing. Now, this year's fair is held under the theme, Embrace Intelligent Technologies, Empower Trade in Services. Let me go to Andreas. Exactly what is new this year that you're expecting, and how do you look at the theme of this year's fair?
Well, I think there's a clear focus now, as we can all expect, on AI, and especially also green services. This very much also related to anything around healthcare, logistics for sure, fintech, carbon trade, anything in this direction. So basically, I'm expecting a lot of exchange on those topics because, especially for foreign enterprises, they see the potential, the need for services in China. And in this way, I think, giving the innovation power we see in China, there's a lot of opportunities to exchange and find mutual areas for even co-innovation.
Well, this year, nearly 2,000 enterprises altogether are expected to attend, and over 20% of them are foreign exhibitors, marking a new high. That's according to the official website. And these foreign companies, come from more than 70 countries and international organizations. Mr. Cardillo, why would more and more, it seems, foreign participants be interested in attending attending such a kind of trade fair. What exactly are foreign companies looking for on this platform?
Thank you. Foreign participation has hit a new high this year because China is the fastest growing services market, and Beijing is signaling strong support for opening this sector. International firms want to tap into these opportunities in digital economy, green finance, healthcare, tourism, and so on, while also funding Chinese partners and shaping the future of global standards in services and trade. Furthermore, trade and services is playing now a very key role in global economy as a stabilizing factor. So trade relationship can find in this field new certainty in terms of global value chains and more generally speaking, relationships.
According to your knowledge, staying with you briefly, Mr. Cardillo, how are Italian or other European companies, how have they been taking advantage of this platform? Can you give an example? For instance, an Italian company maybe that are participating in the trade fair?
Yes, on IT, research and development projects is becoming more and more important. So we have seen firms, companies, but also universities creating joint research centers for IT and new technologies. Education also is playing a key role. Mm-hmm. So I've been witnessing new partnerships in terms of dual degree and student exchange. So I guess on the overall, Italians and Italian companies with their abilities to innovate can have really good opportunities in China.
Mr. Li, according to the World Trade Organization, last year, world trade in goods in terms of volume rose by 2%, but services trade jumped by 10%, and that's keeping up a recent trend. And the share of services makes up over a quarter of all global trade. What do these numbers tell you, and where do such growth come from?
Well, the growth comes from the fact that countries that are advancing in their stage of development are starting to have more and more services in their consumption basket. United States, for example, U.S. consumer spends about 70% of their household budget on services and only about 30% on goods. So you can sort of see that as countries start to advance and populations advance, incomes start to grow into the middle class, the demand for experiential services, the experiences start to dominate their need for goods, because most countries, as they advance in the different stages of development, are satisfied with their goods levels, but experiences are something that I think people always desire, whether it's travel, entertainment services, or in the business world, professional services, lawyers, and for China, it's really making a splash right now in the AI world. Artificial intelligence is a service that is provided by the major AI companies to advance the ability of companies to do business. And to do business much more productively and much more efficiently. That, I think, is the excitement that we're seeing today, especially in China, and so much interest is in coming to China, because as China opens up its service market, it's also opening up its market for AI and other high-tech exchanges.
We'll talk about China's latest policy in terms of opening up in the services sector. But let's look at the volume and the growth of China's cross-border trade in services. And it's quite astonishing. Mr. Zhou, let me turn to you. Latest official data show that China's trade and services maintained solid growth in the first 7 months of this year, reaching over $640 billion US. That's up 8% year on year. Is China driving the global increase we have just talked about, the 10%, for instance, that the world saw last year in terms of trade and services?
Well, in my understanding, it may be the fact that China is a very important, economy in the global trade partners. So if you're looking at the ranks, maybe China has ranked the second or the third in the total volume of the global trade in services. And also, I mean, that is not only just coming from the size. We are having so many diversifications about different sectors, and the sectors like in the in the tourism, in the education, and also in the transportation. China's companies are really very active in doing the businesses with our trading partners. And also, if you're looking at most of the important growth in some of the innovative ways of doing businesses, I think that Chinese companies are really good at that. And they are providing new solutions and something to do with the manufacturing because they are complementary part of this traditional industries, and also something to do with new messages or new ways of doing businesses. I think all these parts, Chinese companies are really active. So we are not only exporting the services, but also import a lot of services, which is provide such a big market for the foreign companies who are doing businesses with China.
Andreas, let me go to you. Having talked about the picture here in the Chinese market about China importing and exporting services, what about traditional service-heavy economies such as the EU, such as in the case of Germany, for instance? What kind of opportunities are German enterprises seeing in the service sector vis-a-vis China? Is it more in the export segment or in the import, or both traffic are happening at the same time? What have been your observation?
Well, I would say it's two-way, right? So basically, I think it's key for us, especially in Germany and Europe overall, to look into the new areas. Where can we identify new areas of growth from an industry perspective, and there look into the service sector. And especially also look into traditional areas of industry, like, for example, automotive. They are very strong ties now and working cooperation in terms of building data channels in the automotive industry to build data ecosystem, which are very, for sure, service-driven and create new opportunities, especially also for startup companies. So I think it's overall important for us from a European or especially German perspective to reevaluate how do we actually engage with China, and there the key terms are definitely the service factors and as well as all the aspect of co-innovation.
Are you, Andreas, are you observing a trend for major German companies, for instance, contemplating on a shift in terms of economic relationship with China from manufacturing heavy to probably more focus on the service sector? Is there such a trend going on for the traditional car manufacturers, for instance, or are they still pretty much focused on the manufacturing and the related research and development in that field?
Right. I think there's still, for sure, while we are still, pursuing the part on the manufacturing side, we do need, as I just said, to refocus on and open up for new areas, especially in the service industry, but also, as I indicated, in new areas of industry, like, for example, healthcare is definitely one of the areas where Germany was and has been very strong. And working with China together in innovative areas like cross-border telemedicine and so on provides huge new opportunities. It's just basically that we need to, and this is why I'm very happy that we have those opportunities to exchange via those kind of platforms, to really engage and openly engage and exchange and see how we can mutually create value.
Mr. Cadillo, let me turn to you. For China, the rapid growth of service exports was driven, according to official data, actually mainly by traditional sectors such as transportation and travel, with trade and travel-related services alone surging by 10%. How do you look at this increase, and what is your understanding of travel-related services, and what kind of opportunities may that create for foreign enterprises?
Yes, travel is like the main service. Move goods, move people. So with the travel rebound that we witnessed recently, millions of Chinese are again traveling for leisure, business, education, and healthcare. Transport recovery, sea, air, and transport services have expanded in line with trade and travel demand, boosting exports into logistics and cargo handling. Then we have a rising middle-class demand. Higher disposable incomes means more spending abroad on education, medical services, and cultural tourism, which is still a trend today, even though we know about some what is happening with in terms of rising middle class and consumption. Furthermore, we have policy facilitation, simplified visa procedures, expand flight routes, bilateral agreements on helping travel-related services are recovering quickly. So what does this mean for foreign enterprises? Tourism and hospitality, hotels, airlines, tour operators, and cultural destinations worldwide benefits directly from returning of Chinese travelers. Education, we see many Western universities renewing growth in Chinese students' flows, especially in Europe. And then we have healthcare and wellness. Clinics and hospitals abroad attracting more Chinese patients for specialized treatments, and retail and luxury, which is always connected with travels and especially for leisures and vacations.
William, let me go to you. What about the picture between China and the United States? One thing that is not as well known as the gap in trade in goods is that actually the United States runs a surplus in terms of trade in services with China. What exactly does that mean? Help the American viewers understand this part of the picture.
Well, I think what has benefited China is that it has become much more efficient in producing stuff, goods, and is able to manufacture goods at very low prices. And so it's been able to export into various markets, especially in the United States, at very, very low prices for goods. The United States has gotten very good at production of services, whether it's education or entertainment or you just name, as Ivan mentioned earlier, a host of services that the Chinese are wanting to buy because their incomes are growing, their tastes are growing into the more sophisticated middle class kind of tastes globally. And so the United States has always been very good at producing these services. What has limited the United States in its ability to export into China and other foreign markets have been trade barriers. And I think the President Trump has emphasized the unfairness of trade, mainly with goods, because we have a huge deficit there. But he's also emphasized that there is still even unfairness in services, that as good as we are in producing services, the United States market penetration in the service sector in China and elsewhere has been limited by a lot of non-tariff barriers. So I think the picture that has been painted has been clouded somewhat by the unevenness of the playing field when it comes to both services and goods. But the goods picture is so uneven, it's captured most of the oxygen in the public press.
William, the United States actually runs a surplus, as I said. Basically, it means that they're selling more in terms of services. For instance, a lot of Chinese students, Chinese tourists go and travel or study, stay either for short-term or long-term in the United States, buying all kinds of services. Why is there complaint that the playing field is not even for American companies still?
Just as China has a huge imbalance in goods, the United States imbalance in services is nowhere near as comparable relative to size and tenure that the U.S. has been producing this stuff. So that's why the unfairness is stark in the goods sector vis-a-vis China, but the unfairness in the services hasn't shown up because it has a large surplus, but it underestimates or undermeasures the efficiency by which U.S. produces these services. I mean, we're talking about things like entertainment services, like movies, right? Quite often, movies are distributed, but sometimes not in China. There are financial services that the United States is very good at, and exports to Europe and Japan and all over Asia, like portfolio management and wealth management services. But in China, it's limited because of the ability of, say, American banks and financial institutions to do business in China has been limited by licensing requirements and other non-tariff barriers. That's the sort of imbalance that still exists, and you would say that the size of the U.S. surplus to be even bigger.
So the U.S. only want to sell to other countries and not buy from them?
Services from China is AI services, right? I mean, the amount of technology leaps that China has made the U.S. a huge customer of Chinese services.
But it seems that the underlying logic is that the United States should be selling much more because it's much better, or its trade barriers are much lower. Mr. Zhou, do you agree with this kind of opinion? I sense from Mr. Li's comments that there is a kind of unfairness in terms of the balance in terms of trading goods and trading services. What is China's how should I say, criteria in terms of gauging whether trade is balanced or not? And I always say this, when you're buying from someone, it doesn't mean that you're at a loss at something.
Well, I agree with you that, if you're looking at the trade balance, I think that is depending on the resources that every country or economy has. So we are trying to make the better for the international trade. If we are not just trying to put more barriers, the trade will be better improved. Well, if you are looking at the issue about the trading services, I think that it's very clear that China, when we joined WTO in the year of 2001, we have concluded the negotiations with all the partners, including United States. So we have fulfilled all the promises. And I mean, if you're looking at the previous years, China has keep on opening our market and trying to reduce the barriers, and also listening to the US companies on what they really want to have from us, from the government administration, and trying to facilitate this whole process. But if you're looking at the US side, I don't think that they are improving any kind of this transparency. They are putting more restrictions on Chinese companies to invest in the United States, and also and more tariffs. So if you're looking at the imbalance, I don't think that it's so unfair if you're looking at the service trade. Well, because the service trade also include a lot of investment by the foreign service suppliers in another country. So we have to keep on this process of using different policies like the negative list in the FDI, and also some of these policies in the free trade zones. So it's very normal that we are keep on the trend of opening up and make it more popular for the foreign investors, no matter where they come from.
Yeah, Mr. Zhou, let me stay with you. What kind of opportunities do you think foreign companies can potentially look at when China is continuing lowering the barriers for investment and trade in services? What specifically can foreign companies expect to see in sectors that have not been, for instance, on the negative list?
Well, I think that also like William has mentioned about the portfolio management, this kind of financial areas are one of the potential areas for the foreign investors to look at, because we are trying to get a better flow of the capitals from around the world. And the second area is about, when China is trying to do more on the health-related sectors, and also the caring of the seniors. I think that is a super large market if actually at China as a super large population countries. And the third one is about the innovative way, artificial intelligence or other kind of smart cities. We are seeing that Chinese companies are really doing good. We are trying to share the opportunities with our partners. So for the foreign investors, I think that the reasons have changed. Maybe in the past, many of them are just coming here to benefit from the lower labor salaries here, but now they are trying to do more to improve their innovation abilities, and it's not just to share their benefit from us. We are sharing the opportunities with them together, and we can benefit from the cooperation.
Mr. Li, what would you like to react to what Mr. Zhou just said? Do you think American business are seeing the potential this way? And, each country has different policies, different circumstances, different priorities. There is just not going to be this absolute fair environment where, you do everything in reciprocity to another country. It's just not going to happen in this world.
I think everything is in terms of trade generally comes in complementarities. That is, the stuff that we sell to China complements what China is very good at. And similarly, when China sells stuff to the United States, it complements what the U.S. is very good at. The U.S. is very good at producing services and not good at producing manufacturing, and vice versa. So a lot of the trade that we expect to take place has to have that sense of complementarity. But when the degree of complementarity is cut short, because the ability of American companies to export the stuff we're good at has been limited. It's not just China, but there are lots of non-trade barriers around the world because each country wants to develop its own service sector and its own national champions in developing these services also, because the value of services is so important for a nation's well-being. But I think that going forward, every policy choice that's made between leaders has got to be to the degree to which your exports can complement my domestic needs and my exports complements your domestic needs.
Okay, I got your point. Andreas, do you have something to say regarding the absolute complementarity nature of international trade? I mean, sometimes countries are buying goods from other countries not because it's complementary, but because they're cheaper, they're more competitive, they're just, more affordable and better in value. What is your reaction?
Well, I think we have to overall maybe not move away, but start to really look into the other aspects. For example, for Germany or Europe, seeing, for example, China just to sell to investor, to sell goods into this or services in this way to the country, but really also look into the way can we cooperate and co-create new things, new services, new offerings, basically, which we then maybe can jointly offer. So I think basically there's a rethinking necessary, and we, from our perspective, from BWA, always focus very much on the people-to-people and business-to-business side. I know there, like on the national level, internationally, there are certain concerns, but in the end, we are all about trying to make a good, mutual, beneficial business. And in this way, I think it requires a certain rethinking in terms of how we actually approach each other. Especially, I think here the service market brings new opportunities to start thinking this way.
Mm-hmm. Mr. Cardillo, what about on your end? Are businesses taking the new approach, or trying to take the new approach, and not seeing it as you versus me, or we're different, but trying to create the future together and benefit from them together?
That's what I believe in. It's important to work together. And the point is that in international trade, and there are also some domestic elements that play key roles. For example, in the American narrative, manufacturing is more important for the electorate of Mr. Trump. So that's why the emphasis is on that, on the goods deficit, on the trade deficit, not service trade deficit. There is a domestic narrative that should be taken into account when you see governments positioning themselves within the international arena. And on the other side, major countries are competing to setting the standard, to the benchmark. And that's when you see more strategic cooperation. So cooperation can be framed in different ways, genuine cooperation, strategic cooperation. If we look the way EU is approaching China, is a competitor, a strategic partner, and an ally.
System rivalry, yeah.
The attempt should be made by all parties to find the point of cooperation, of negotiations, because at the end of the day, if a product is not developed by this feeling of belonging by all parties, then you have access to the market problem.
Mr. Zhou, finally, to wrap up, do you see, as China becomes more of a services country, as it continues to go strong in terms of manufacturing, do you see more potentially trade friction between China and the United States, or China and EU? What do you see going forward? Very briefly, 1 minute if you can.
Well, I think that China is still putting it's very important for the manufacturing, but in the same time, I think the manufacturing cannot just keep its original way of doing businesses. We have improving the services as the complementary elements to supporting the manufacturing. So when the China relation with the EU and the US, I think it's still very important for us to explore the better paths that we can do to negotiate with each other, trying to give the market more confidence. If not, I think that all the stakeholders will be harmed from that.
Okay, we have to leave it there. It's a long-term topic, but very important and very interesting as well. Many thanks to my guests, Andreas Hube, Ivan Cardillo, William Lee, and Jomi. Thank you very much for your insights. And with that, we come to the end of this special edition of The Point with me, Liu Xin. As always, you can follow me on Facebook and X using the handle Liu Xin in Beijing. On behalf of the whole team, thank you for watching. You've got the point.